finally, we have confirmation that yes, First Republic Bank has failed and has been acquired. So let's talk about that. Let's talk about what else is going on as we enter May. If you look at the deal, of course, JP Morgan does take over much of the assets, but the FDIC, see, you have to read in between the lines. The FDIC agreed to share losses on mortgages and commercial loans that JP Morgan assumed in the transaction and provided it a $50 billion credit line. That's a lot. And how much losses did the FDIC just incur by helping with this merger, right? So if you look at the rest of the deal, it talks about billions upon billions upon billions that JP Morgan took over. But what you don't see, their liabilities. How much liabilities that basically brought First Republic Bank downwards to basically being worth almost nothing. Well, see, this kind of stuff, JP Morgan doesn't incur. FDIC does. And where does FDIC get the money? Nowhere. Out of your pockets or from the money printer. FDIC doesn't have all this insurance. And if you thought First Republic Bank was not a big deal, it is actually the second largest bank failure in terms of assets. Even bigger than Silicon Valley Bank. Remember how much press Silicon Valley Bank got and how disastrous it was. People don't even realize First Republic Bank actually was a bigger bank at the time of failure, at the time of acquisition. $229 billion assets. Outside of Washington Mutual, you have the next three, second place, third place, fourth place, all within the same year. So how many more are we going to hear about this year? And of course, the Treasury Department is telling everyone, don't worry. The banking system is sound and resilient, and all Americans should have confidence in their deposits in their bank. It's easy to say that, right? And it's also something you would say when there's no confidence in the banks or deposits, right? So, of course, you would have to say that. You can't have Janet Yellen coming out and say, well, yeah, I wouldn't trust the banks either right now. That would be horrible. So, of course, they have to say that, right? But can you really trust them? I don't know. You know, part of this acquisition is like, I'm assuming, you know, there's a lot of commercial loans in here, right? Not just loans, a lot of commercial deposits. You know, like with Silicon Valley Bank, when it collapsed, it turned out a lot of tech companies had hundreds of millions stored within. And keep in mind, FDIC insurance only up to $250,000. So in the case of SV Bank, FDIC actually bailed them out and said, hey, we're going to allow everyone to withdraw, including Circle. Circle got bailed out too. Let's not forget that. So eventually, there will be a point where, hey, if it fails, you're not going to have everything, especially if you are a large whale, you have a substantial amount of money, or you're a company, right? So just keep that in mind. Bitcoin actually started turning up this year, started gaining. And we ended April with a plus 3%. Not bad. Considering 2021, negative, 2022 was absolutely horrible, but 2022 makes sense because it's our crypto winter year, right? But we have thawed and we have come out of it. So we had basically almost 4 straight months. February, barely down, but you could count that almost as a green month. But basically so far, pretty good. 40% in January, 23% in March, 3% in April. But what's going to happen in May? May, we had a horrible 2021 and 2022. But traditionally speaking, May is not a bad month. Going back, 2018 was bad because that was the year after the bubble top in 2017, right? So that kind of makes sense. And 2021, you know, was the bubble year, and then 2022 is when we started coming down. So if history repeats, that means May of this year should be in the green because we're coming off of that bubble top year, which is 2022. Although we didn't really have a bubble top. If we did, Bitcoin would have hit $100,000. We got shortchanged by the Fed, because Powell's in December started announcing that there were going to be rate hikes starting in January, and that kind of just like cut the whole pump. So what's going to happen in May? Well, if we have more bank weaknesses, which I expect we will, especially since Jim Cramer said First Republic Bank, that's it. That's the last bank crisis. It'll be over after First Republic Bank. So rest assured, Inverse Cramer will be right. There will be more bank failures, and that means it's going to help Bitcoin because more and more people are just turning to Bitcoin. But that's why so many people are turning to Bitcoin. Now, this is out of UK. Supposedly, we have this panel of fintech specialists that were asked about Bitcoin's price in 2023, where it's going to be in 2025 and 2030. Surprisingly, these specialists are pretty conservative. They believe Bitcoin will end the year around $35,000. And we're only in May. Just started in May. And we were at 30,000. I honestly think we could break through 30,000, 35,000 pretty easily. Okay, but you know, it's okay. Let's do conservative, right? In 2025, by the end of the next bull run, Bitcoin will only be at $100,000. Again, very conservative, extremely. And by the end of 2030, which is the next bull run, the end of the next bull run, then they predict Bitcoin will be at $300,000. The transaction count right now, all-time high, higher than even peak years, peak 2017, peak 2021, okay? We have more transactions now than ever in Bitcoin's history, despite Bitcoin only being at 28,500. So the fundamentals of Bitcoin has never, ever, ever been better. Never, ever. Same deal with mining. Mining farms, mining companies, more and more are getting listed. They want the funding to buy more miners and just keep hashing. That's why you look at the hash rate. I mean, it just keeps going up and up and up and up and up. It doesn't stop because the miners just keep turning on more and more mining machines, and the hash power and the difficulty keeps on going up. So again, this is part of fundamentals. Why this is important? Well, with so many miners and so much hash rate, it is virtually impossible to hack Bitcoin's network. This secures it. You could argue, yes, it costs an enormous amount of money, but that enormous amount of money makes it so that it is virtually unhackable at this point. You can't have anyone hacking Bitcoin's network because you need an equivalent amount of hash rate and equivalent amount of money being spent to be able to even try to hack Bitcoin's network. That's how secure it is. There's nothing else out there that comes anywhere close in terms of security and also decentralization. And that is why Bitcoin has infinite worth, if you think about it, because you can't replicate this. It is the only recognized digital currency and network across the world that everyone now just accepts. No one tries to ban it. No one says this is a Ponzi anymore. Well, besides Peter Schiff.